Good evening, everybody. We'll try to make this relatively quick tonight since it's a nice summer evening, and I know you all want to be out toasting marshmallows and catching fireflies. All right, so what we're going to do is here's kind of a quick analysis that you can do when you know what the graphics of the candlesticks are telling you. We can see how the pullback of the Dow came back right to the T-line and traded indecisively. At the same time, the NASDAQ opened at the T-line and traded positive. So there's just one statistic that you really want to keep in mind, which is as long as you're trading above the T-line, the probabilities are extremely strong that you're still in an uptrend. But here's kind of the catch-all. Notice our transportation index doing a bobble breakout through the 50, implying there's going to be more upside, which means if one index is trading positive and the others are trading relatively flat or even down some, because there's no reversal going on in the markets. It's just just some consolidation. So depending on what they do tomorrow, if they start trading this higher, the obvious target is going to be the top of the trend channel, which means wave 1, wave 2, wave 3, about the same magnitude, brings you up here. At the same time, it also implies that you're probably going to be still in a steady uptrend for a while. So that's where you kind of keep your bias toward the long side. So let's take a look at some of the ones that we're trading. We recommended VR or VLRS because of the obvious. What is today? Monday. Friday, it did a morning star signal with a best friend type third leg of this off the T-line, making the 200-day the next likely target, which would also be wave 1, wave 2, wave 3, the same magnitude as wave 1. We've got some like MNK. You can see the bobble breakout. You can see the steady eddy as long as it stays above the T-line. We went after, did this back off as much? I wonder why it looked. But we started buying PTCT. It did back off apparently at the close because it was traded up most of the day. But notice what we have, that little scoop type breakout with a gap up. There's a good prospect. This could be in a good steady uptrend. And the direction is going to be fairly good based upon this gap up through the resistance level. We still have Aqua. Oh. Did I do this wrong? Maybe I spelled it wrong. How about that? A scoop type pattern. Took a little bit to get going, but now it's broken out. So we're doing what we suspect a scoop pattern to be doing, the slingshot effect to the upside. GIII needed to stay above the T-line. Now, if this opens positive, what's the two pieces of evidence of a more bullish trend being provided from this? One, they couldn't close it below the T-line, and two, looks like a J-hook pattern setting up. GLMD also held up reasonably well today. Again, there's your bullish flutter kicker, pulled right back to the T-line, and what did you get there? A bullish engulfing signal, which suspects more upside. And the nice thing about one is, if they brought it right back up here, that's going to be a 25% upside. And TJ Maxx, staying with this one because of one very simple analysis. Let's remove all the horizontal lines. This horizontal line. You can see where the fry pan bottom breakout is. Now what do you suspect? An uptrend as long as it stays above the T line. Now SPPI had been working relatively well. Except today it closed just below the T line. Maybe that's the end. I say maybe that's the end. If it opens lower tomorrow, you close out the position. If it needs to open positive and trade positive to indicate that the T line is still acting as a support level. Let's see, what am I looking at here? Iridium. This is where you have to start getting a little bit subjective. My big word for the night. Notice right about in here, starting to run into resistance. And for 1, 2, 3, 4, 5, 6 days, it's not been a good bullish chart. You're sitting right on the T line. So what's the obvious strategy? Basically, it has to open positive and trade positive tomorrow to stay in it. If it opens lower, showing this is a shooting star doji, followed by a doji, stochastics heading down, we're losing too much steam, move on to something else. Plus, if it opens lower, what's it telling us about our trajectory? It's pretty much disappearing. VICR, this is where knowing what each individual signal illustrates for us. Doji, 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 doji. Is that a compelling pullback? No. So what you can do, knowing that those dojis, Iridium, if you, let's see, I know there's executions in between the 5-cent increments, but I don't know what dictates when they do it. So I don't know. Probably somebody in here knows more than I do. And that starts to trade below the open that you would close position that you just opened because it started to trade up. John, no. If it opens positive, I mean, we want to see it open positive. That is a good indication. And opening positive also takes into account that when you get up in the morning and you turn on the TV or look at your futures for the Dow and the NASDAQ, if we're ready to buy this on positive trading, obviously we don't want to see that the market's opening up down 120 points for the day. That tells me you don't want to chase after it. Now, on the other hand, if this is open positive and the Dow looks like it's opening up 100 points, yeah, you could go after it immediately. What you don't want to see is it opening down here. That's telling you the bulls aren't there, so it's not time to get into it. Now let's try to illustrate. Oh, we got a good one to illustrate. This is why you want to see something open positive and trade positive. We recommended AXTI today, but you can see what happened today. It opened and immediately started trading off. Well, just common sense says, well, if they're starting to trade it off, I got to wait for this profit taking or whatever to be over. Well, in this case, it never occurred. So it kept you from getting into a bad trade. So I know in the past, I can't remember which ones it was. This one? I can't remember. There was one that opened, and this is part of that process. I'm going to try to point out here exactly. Say it opened right here and started trading positive, and we were ready to buy. what didn't we want to see by the end of the day? We definitely did not want to see it close back below the T-line or even back below where it opened. Because if it starts trading back down below where it opened, who's now in control? The people that were buying or now the people that are selling? Obviously, if they come back down through the open, the sellers have taken control. We'll be doing a entry and exit strategy session here. I say the near future. We're getting close to being up at the lake, and I'll have to see what our schedule is. Chem, another one that we started seeing the selling, the hanging man, the doji, the lower open. It needed to stay above the T-line. Today it closed below the T-line. It did a doji, so it was still a little bit doubtful. So the strategy remains the same. That's why these simple candlestick signal rules or the T-line rules help immensely in the sense that we know the doji rule. If it opens lower, that means they're taking it lower. You close it out immediately. It needs to open positive, which has a good probability they're going to take it positive, meaning they are going to hold at the T-line. MOV, another one that could have been closed out. This isn't good. No. Yeah, there are lack of follow through. So, but if you held on to this one, you still got the potential scoop. But two things could be happening at this point. One, if they open this positive after this big doji, that could be the scoop breakout. Or if they continue to trade it flat, that could be the dimple in a big fry pan bottom. That if it traded flat tomorrow, I'd probably close it out. Where would I buy it back? If it broke out through this level up here. So again, I can look at the visuals to tell me what the investor sentiment is doing and where that investor sentiment would be changing. PRMW, another one where you just stay long until you see a sell signal, a confirmed sell signal. ITGR was a nice fry pan bottom breakout. And then it consolidated. Where did it consolidate to? Right smack dab to the T-line and traded positive. So what's this telling you? That if they start trading this positive, we already know this supporting at the T-line, that we probably have a J-hook pattern starting up. You can be buying this one with a high probability of it moving in the right direction. Oops. An OPK. Another one that had a nice slow curve breakout, consolidated, but notice it hasn't been able to close below the T-line. Now, tomorrow, obviously, you need to see this open positive for it to form a bullish J-hook pattern. Okay, some of the biggies. Roku is still trading above the T-line, so you stay with it. Tesla, C was rolling over. They had a hard time getting through this level. Then you had a hanging man doji. Now they've gapped it down. What do you think you got going here? Probably a wave 1, wave 2, wave 3 that could possibly take you right back down here to that support level around the 275 area. Labu kind of gives you the indication of what's going on in that sector. In this case, we can see absolutely nothing is going on in the biotech sector. So, how does that help you? Tells you you probably don't want to be buying any of the biotechs right now. There's just not any interest in that sector. Amazon, observe what happened today. They traded it way down and basically closed it right back here on the T-line. So what do we need to see to confirm our hammer type signal? Bullish confirmation. If they open this lower tomorrow, they're taking it lower, because that means after they took it up today, the bulls trying to take control, the bears are still in control. And Apple, nothing. This is kind of telling you what's going on. Even though you're still above the T-line, you have a down day and up day, a down day, up day, down day, and an up day. This is telling you right now Apple's not going anywhere. So if I owned this one and it opened lower tomorrow, I'd close it out. If I wanted to buy it, I'd buy it at 193, telling me they did do a wave 1, wave 2, starting into wave 3. And Netflix was a good example of an almost signal. And I say almost signal because if this had come up further, now that would have indicated you had a belt hold type signal. But the fact that you still had a lot of space here just told you they were covering, but it wasn't the bulls taking control. And that was evident the next day when they started trading it down. It told us this was just a bounce after opening lower. Where's our next likely target? Probably right back to where it opened. See if that's going to act as a support level. Yeah, that would be a bearish message. The fact that they gapped it down. Now, had they brought it right back up into the range, that would have told you, oh, they took out a lot of sellers and they're right back in the range again. The fact that they kept it down here said, oh, the bulls tried to get it up there, but if the bulls are winning, they better trade it up higher. Otherwise, they didn't have enough strength. The bears are still in control. So right now, with the market as lethargic as it is, patterns are still working. Here is still, what one did we just look at? All right, John, I guess my question is, where are the stochastics? Are they in the oversold area? Now, speed up the answer. No, this is just an up day and a downtrend. Stochastics still heading down. Now, you get to the oversold when the stochastics get to 20. So just because they traded it up doesn't mean that that was a signal. Remember, a signal has to occur in the right conditions of the stochastics. Obviously, a bullish engulfing signal in the overbought condition doesn't mean very much. Yes. Well, it might have opened below I missed that too. Yeah, it doesn't look like it quite closed halfway up the candle. IMMU, still in this fry pan bottom. And what's the criteria? You stay long until you see a sell signal and a close back below the T-line. THC. Ooh. That's not the right one, but THC, can you see anything observable about this gap up? First of all, Look how it kind of broke this downtrending channel. That too, yep, good one. So you got kind of this downtrending channel, which is basically a wedge formation. You've got a trend kicker signal that broke this out. What's that tell you about this area right here? There's a new investor sentiment. They've broken out through that wedge type formation. Where's your next likely target? Probably somewhere up in this range. Now, why is that relevant? Because there's lots of people out there looking for wedge formations. But we have a little added benefit by saying, all right, a trend kicker signal got that one moving. And what do we know about a trend kicker signal? That it's one of your strongest signals, and it broke through a resistance level. That implies there's going to be more upside. Now, the fry pan bottom, you can see what happened in Cliffs. There's your little fry pan bottom that broke out through this level. Gave you a lot more upside. On the other hand, we were buying 5 the other day because of this fry pan bottom. And it closed back down here. I wasn't here today at the close. But the only reason we held on to this was more of a supply and demand issue. Whenever you see somebody come out and either issue a downgrade or an upgrade, which affects the price move, give it a couple of days, because what does that downgrade mean? It means one analyst that has some people following that analyst, he says it's a downgrade. So by the time you get done with that group that are selling it, usually the pattern will continue up or continue in the direction it was prior to the downgrade. ITCI. Little fry pan bottom bobble breakout. Wave 1, wave 3 implies coming back in up here to test the recent high. Let's see. I can't read my own handwriting tonight. Another fry pan bottom that broke out through a resistance level. That's on WBS. Fry pan bottom on NSIT. Fairly relevant in the sense that it broke out above the recent high with doing a doji sandwich. What do we know about a doji sandwich? It implies there's going to be more upside. So if we know there's going to be more upside, what's that tell us about our fry pan bottom? More than likely it's breaking out. And Burlington Coat Factory. Same scenario, kind of a fry pan bottom, and you're right there at the breakout level. So the reason the fry pan bottoms as well as the other patterns are more relevant is because it takes them a while for investor sentiment to build up. That means it's not an instant change of investor sentiment. So that means even if the market is trading off, a fry pan bottom may still continue higher because people were buying it not because of the direction of the market, but for some other reasons. All right, sorry about that. This one, observe the obvious. Trend breakout. So the reason we want to find things like this is that a lot of people will say, well, shoot, this stock is up 10, 12% over the last couple of days. I don't want to be chasing it. So that's where going to your 10-minute chart becomes a much more added attraction. So if I had bought it here, fine. If I bought it here, each time at those points I was buying it, it was telling me the buyers were there. I may not have bought it here because I don't know if they're going to start selling it off. May have bought it over here. Wouldn't have bought it here because I don't know how far they're going to sell it off. And I may have bought it back here knowing that they sold it off and they're still trading up. And if they're still trading up slightly near the end of the day, what's that imply about the overall candle for the day? It's still going to be pretty close to the top end of the candle. Let's see, what else do we got here? Teva. Teva. This is where you get set up. Make this a little bit bigger. Kind of a little bullish engulfing right off the 50. The stochastics near the oversold area. If they open this positive, what's that imply? The 50 was the place where everybody was starting to buy again. We just happened to be able to see it with a little bit more plainly because of the candles. Oh, the kicker signal. Which one did we look at on the... This is a kicker signal. This is a trend kicker signal because your trend had already started. Notice it closed here. I'm sorry, it opened here and closed down here. Then the next day they kicked it to where it opened at or above the open and went the opposite direction. Would you wait for Teva to go above the T-line? Let's see, on a kicker signal, that's your strongest indication there's been a major change of investor sentiment. And yes, on Teva, hold on for 1 second. Ross Stores. Another one that's got kind of a fry pan bottom, broke out through the congestion area. Let's make this a little bit smaller. Where's our next likely target? Climb up into this trajectory range. Total Systems. Notice that this one broke out. I make this a little bit smaller. Whoops, that's not what I want to do. You can see kind of the resistance level right here. And then notice what happened when it broke out through the resistance level. It basically came right back to the resistance level and used this area, the T-line and the resistance level, now as a support level. And we can see what type of movement there is, or pattern, a J-hook pattern. No, the cat is a pest. Lee, if you're getting faked out above and below the T-line, then you can assume there's really no trend. You want to see a strong buy signal and then staying above the T-line. If it's bouncing back and forth at the T-line, it's pretty much telling you that's what it's doing, just kind of bouncing around. It doesn't have a real trend to it. Now, here's one, HCLP. That is a kicker signal. Make this big enough to... It opened here, closed here. Today it gapped up and finished trading higher. Now the true kicker signal, you don't want to see a shadow at the lower side. You want to see it open and immediately start going the opposite direction. But even if it does have a lower shadow, it still shows you the force to the upside. Let's see, I wrote down pen for some reason. bullish engulfing. This is what we call a stutter step. Notice how we had a nice morning star signal and it started up and then failed. Kind of stutter step, and then notice what we had right after that, a bullish engulfing. So if you look at the whole trend and the pattern all together, what do you have? Morning star signal, a bullish engulfing signal. That tells you the bulls are definitely starting to take control in here. Manpower, this one was to illustrate, notice how it was choppy in here. Didn't have any direction until they gapped it down, took it down and brought it back up. Took out a lot of sellers on Friday, and now the bulls are in control. This one you can be buying. Yes, BB on HCLP. Now we go into our next analysis. What do we want to see to confirm the bulls are in control? We want to see them trading a positive. We don't want to see them open it down here. Now, if they did open it down there, we don't pay any attention to it. Oh, cat. Okay, we're going to start bidding. Lowest bidder wins this cat. Now I forgot what I was talking about. Kitty, or driving me crazy. We don't want to see it open down here. Now, if it does open down here, we don't pay any attention to it. But if we all of a sudden start seeing it come up and going through the previous day's close, when it opens here and goes up through here, what's it telling you? You get another green candle and the bulls are in control after a kicker signal. So, I hate when she does this. I try to move the mouse around. Now you're standing on the list. Oh, you're just enough to drive me to drink. Oh, this is where I hit. Okay, so there's your fry pan bottom breakout. Oh, let's see. Your fry pan bottom breakout through the resistance level. I really scooped this up. Look what you've got setting up over here in HCC. This is just kind of a visual analysis. You can see there's a wedge formation here. So what tells us there's a different dynamic coming out of this wedge? If they break this out, we're in another strong uptrend. Look kind of what happened here. Kind of a little wedge formation on FIVN and broke out to the upside. What else can we add to this? Bullish engulfing signal. The fact that he could never really close. Oh, no. I don't know how to get back. Oh, thank goodness. This thing drives me to drink. Got a bullish engulfing, got a break out of the wedge. You can see how there's like a little T-line crunch, and there was support right here at the 50. Oh, Jay, I do everything. I throw her on. She's got a chair right next to my desk that sometimes she'll sleep on. But then I'll sometimes tap way over on the table next to the side of my desk, so she goes over there to see what that is. But then she comes right back again to see what I'm doing. That's why she's for sale at the lowest bid. J-hook pattern on this one. This one's using the 34, where you kind of had a bullish engulfing signal, doji sandwich, breaking this little downtrend, getting ready for your uh, your J-hook pattern. So anytime you see this, where you can recognize that there's kind of a resistance level, and they break through it, that tells you your next wave is starting. We have a lot more visual advantage because we can see there was a doji sandwich that took us up through that resistance level. Same thing on Macy's. Notice Macy's broke through this little downtrending channel. And what else did we see? A hammer signal, a doji, kind of a bullish engulfing signal, a doji sandwich right here. What did that tell us about this resistance level? It's not there anymore. Now we've got wave 1, wave 2, wave 3, and we can measure wave 3. If this went from 30 to 40, probably we're going to move from, let's say, somewhere in this area of 37 to probably 47. Oh, Rick, the raccoons. As a matter of fact, at night, Sandy had left a big bag of birdseed on the front porch. Here's another one that broke out through this level. And so notice everything that's on this chart. Kind of a breakout, slow curve, piercing signal right here off the 200. The 200 seems to be acting as a support. Where do we put ourselves in situations? That's not going to be a question I'm going to answer. We can put ourselves in situations where the probabilities of big price moves are greatly in our favor. J-hook pattern is also considered a wave. Well, you kind of figure a J-hook pattern is wave 1, wave 2, wave 3. I'll find one for you, Bill. I'm sure I will somewhere. But J-hook pattern is, again, there was that breakout of this downtrending channel with a slow curve. That's the slingshot effect from the slow curve. Anyways, I'll find a J-hook here. I guess this is a little J-hook. So if you see it pull back and start back up, which we anticipate is going to be a J-hook, we know that this is wave 1, this is wave 2, this is wave 3. Now, if it pulls back again, this is wave 1, this is wave 2, this is wave 3. So we're not trying to do an Elliott wave analysis where you got wave 1, wave 2, wave 3, wave 4, wave 5, retracement of an ABC. We're looking more at what the patterns are telling us right at that moment. Because I'm probably not going to hold, in this case I might have because it really didn't close below the T line, but I'm not going to hold a position if I'm swing trading for any great length of time. I want to take, if I see this breakout, I want to catch this move and then move on to something else. A definition of the wave is just a move that you can see that moves in a direction until there's a sell signal and they start moving in the opposite direction. So it's not anything more sophisticated than that. This is wave 1, this is wave 2, now you're in wave 3. Oh, Jay, you're trying to teach an old dog new tricks. If you just factor that J-hook pattern is a wave 1, wave 2, wave 3, we'll all understand each other. Okay, on the short side, kind of observe the obvious. We recommended going short on CPG because look what was happening. Let me make this bigger. There's kind of our little kicker signal after seeing a failure up here at the 50. So if they came up and they couldn't get through the 50, and then the next day they did a kicker signal to the downside, what's that tell you? It tells you the force of the sellers are great that they failed this level. They're probably heading down. Where are they going to head to? Well, we've got the added visuals to say we could pretty much identify that it's in a downtrend. We can pretty much identify here's the bottom of that trend. So where's our target? Probably down in this area to hit the bottom of that trend channel. So a correction in an uptrend is also a wave. Yeah, you just the J-hook type pattern in an uptrend, or let's see, we're on the downside here. This is wave 1, this is wave 2, this is wave 3. This is wave 1, this is wave 2. Now we're in wave 3. So it doesn't have to be real sophisticated. All you have to do is identify what everybody else is probably watching. And in this case, the downtrend and the failure at the 50 corresponded with each other. And we knew they were selling off once they hit the 50 because of one of the strongest candlestick sell signals. The kicker signal. See, I've got some of these out of order. Another one that kind of here at the resistance level, we did a doji, gap down. And then where did this tell us that the bears are really taking control? We did a doji right on the 50 and the T-line. And what's our simple rule of a doji? It's going to move in the direction how they open after a doji. So when they open this lower, where was another level that would tell you there's a new dynamic? There's kind of a support level right here, a wedge formation. And they broke down to the bottom of this wedge formation with a strong sell signal, a doji gap down, or not gap down, but a doji selling off. I told us where would you enter this short? I would enter it probably right about here, right as it came down below the low of the, darn, this thing is like, if I was looking at this and I was watching this one, I'm either thinking, all right, if they open this positive, we're still in an uptrend. If they open it lower, it's probably a failure. Now, where do I want to see it fail? Now, if I could see there was a support level, if they broke through that support level, which also kind of corresponded with coming down through the low of the doji, that would tell me they opened it lower, they're trading it lower, they're breaking this support level, they failed up here at this resistance level, I can be short. Now, do all short situations like that go strong? Definitely not. But every time we set ourselves up by establishing a position, we're setting ourselves up with the probabilities that it's moving in the direction we expect it to, and there's a good possibility or a good probability that it's going to be a good, strong move. So enter short intraday, trade not at close. Yeah, I might have, and again, this is a function of the market. If, let's say this opened lower, it was hovering around here and not going anywhere because the market was trading up 40 or 50 points. But I already know that this is not very strong. I might say, all right, if it comes down through the low of the doji, I'll have a sell stop there so I can enter that position. Yeah, so the doji has already given us that very simple analysis. It's going to move in the direction how they open after a doji. Here is ARRY. What's this telling us? They've failed here at the T-line. They've failed here at the 50. If they open this lower, what do I expect? Probably at least heading down to test the 200 because of wave 1, wave 2, wave 3. Now, are the waves inaccurate, or is it going to get there? Who knows? What's our main criteria for opening and closing a position? The signals themselves. But we have to make an analysis of what is that price movement have the prospects of doing. So If this was going to move down from here to here, that may not be worth our risk reward to have our money out there for that little bit of a trade. If it's a good 16% move down to the next support level, yes, that makes it a worthwhile trade. The green line is what we call the 3T line, and its relevance is that the further away you move from the T line, the more the 3T line becomes more important. NTGR, same exact thing. Look at what we had up here. Doji, bearish left-right combo, a doji, right here in the T line. So what's our next analysis? Well, if it opens positive, we got a J-hook pattern. If it opens lower, what's it telling us about the T line? It's not holding the T line after a sell signal. Do you always get a big move like this? Definitely not. But at least if you started shorting it on weakness, you're at least putting yourself in a position where it eventually comes down here, and some days you get lucky, and it's all in one day. It just basically puts you in the position of being in the right direction at the right time. We got out of Pisa the other day because notice we had a kicker signal, your strongest reversal signal. Next day they took it up some, but brought it back down here. What'd that tell us? Got to watch out. Next day they opened it and closed it where? They closed it below the T line, number one. And number two, they closed it more than halfway down the candle that told us the bulls were in control. You close it out. Oh, Bill, you're going to have to ask where your stop is on the one because we moved fast enough that we're probably on to our next chart. RYAAY. What's this imply? When they're gapping it down, remember, a lot of people say, oh, shoot, I don't want to be chasing this. If this is a doji best from gap down, what's the implications? There's probably going to be more downside. Would you short Pisa now? You could. Yes. If this opened lower, wouldn't be afraid to short it because where's our support level? Well, I can kind of see there was a support level. Ooh. Kind of right about in here. And it went right through that. So what's that tell us? Wave 1, wave 2, now a gap down going into wave 3. What's the gap down represent? A very, very strong desire to get out of that position or shorting that position. ITW. Gapped down. Did a doji. So knowing that, what's our strategy? Well, if they open this positive tomorrow, probably don't want to do anything with it. If it opens lower, what type of signal is it setting up? A bearish flutter kicker signal, which means there's probably still going to be some powerful downside to this one. We recommended AXTI. We will be doing an entry and exit strategy session here pretty soon. But if this opened positive and started trading positive, we had a trend kicker signal in here. But we also had a shooting star here. So what did we need to see? We needed to see them open up positive and trade positive. Well, they opened up positive, but probably by the time you could even get everything typed up and ready to go, it was already trading off. So if you start seeing it trade off, what type of candle is it forming? A dark candle. What's it tell you about the bulls? Bulls aren't there yet. Bulls aren't there yet. Bulls aren't there yet. So this basically, even though it opened positive, there was no buyers there. Yes. So now you've got a shooting star, bearish engulfing. If it opens lower, yes, you got the prospects of going short. So your first target, though, would be right here at the 200. Yeah, so you do have a big bearish engulfing signal. Same scenario on LII, Lennox. Big bearish engulfing signal. And remember one of our little trading truisms. The bigger the signal, the more compelling there's going to be a change of investor sentiment. Let me make this smaller. Where do you... Oh, man, how can I miss that? That just makes you want to kick your grandmother. Where do you think the next target could be? Probably back down in this range. So if you're an option trader, that becomes a good put candidate, or even a good bearish or a put spread candidate, because you know where your next target is likely to be. This is not working out well. I don't know why that's not coming up. PGNX. Another one that's, they tried to bring it back up. There's your bearish left-right combo. There's your failure here again. Now where are you sitting? Right about in the support level. If they open this lower, where do you think your next target's going to be? Probably all the way back down to the 200. Okay. Yes, I'm sorry. For those folks that are fairly new, the only things I usually have on my chart is the 200 simple moving average. The blue line is the 50-day simple moving average. Oh, is that right? All right, Charles, didn't know that. Destroyed a 960,000 square foot factory. Jeez. Can you imagine how many football fields you could put in that size building? Now I forgot what I was saying. Oh, the reason we have these two moving averages on our charts is because every major money manager around the world has those moving averages on their charts. They make their decision based upon those moving averages. We don't use them to make our decisions. We use them to watch to see what everybody else is doing, what type of signals they're forming at those levels. So we know because everybody uses them, we can, with the visuals of candlesticks, we've got a much better head start to know exactly what they're doing at those levels. This is the 34 EMA. It works more effectively on futures trading, but it's still relatively effective on stock trading. And then the T-line is the 8 exponential moving average. 1,400 people, all right. So the T-line has that same simple rule as you see in some of the signals. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. Bill, I took the 20-day simple moving average off because the 34, we had Doug Campbell on here not too long ago, I'd say a few months ago. I used to use the 34, and then for some reason I shifted over to the 20. I think it was because during one of the big market uptrends, the longer a trend stays in progress, the less likely they're going to come back and test the 50, but they start using the 20 as a support level. But that doesn't happen very often. Yeah, so the 34 EMA is the gray line. Then you've got the T-line, which is the 8 exponential moving average, and then you've got the 3 T-line, that is the 3 exponential, and its effectiveness is that the further away you move from the T-line, it becomes more effective. And it also adds as kind of a little comfort confirmation that if you see a sell signal and a close below the T-line and the 3 T-line comes down through that level, you've got a higher probability that your reversal has occurred. Yeah, I use the 34 more over in for trading futures. This is crude oil. It just seems to work a little bit more effectively. This is gold. Apparently the wrong gold. AQ8. You can see how here the 34 kind of turned everything down again. Okay, I got a few more, and then, whoops, I got one more. RGNX. This is probably going to be a good short for tomorrow because you've got a bearish engulfing signal and a doji. If it opens lower, where do you think your next target is? Well, if it's a doji sandwich, it probably should take you down to the 34. And then if it's a doji sandwich, more than likely it's going to take you down to the 50. Now, this is also where people say, well, do you ever use the Fibonacci numbers? Don't use them as a primary reason to be buying or selling, but you can throw the Fibonacci retracement numbers on because that's what people are trading the Fibonacci. So it's either coming back here, coming back here, coming back here, coming back here. We don't know where it's coming back. What we have the advantage of is if it comes down here and does a hammer bouncing off of that one, we know that they were buying when it hit their 50% retracement. What criteria do you use for long entry besides bullish reversal candlestick pattern? In other words, do you need a close above the T line? If you're trading close to the T line, yes, you probably want to improve your probabilities. You want to improve your probabilities of it. So right here, I wouldn't have gone short anywhere in here or even here. Or I would have gotten ready to short here because we were that far away from the, or that close to the T line. Now, the further you move away from the T line, if I was long, I'd be more apt to take profits because I know that the probability is when you see a sell signal in the overbought area moving too far away from the T line, it's probably coming back to test it. Oh, it was Carrier. Yes, Carrier was the one that some found good setups, but 2 days before earnings, too risky. Again, I think Google is trading up 30 or 40 points, but you can see what they were doing right before going into the earnings today. They were buying, which means somebody that probably more, what do I want to say, more in tune or watching the company closely, making their decisions to buy or sell. They were buying going into the earnings. Now, if you always go back to your simple statement that candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame, but they're doing what their decision making is going into that earnings. That's usually going to be the correct method or the correct price move. About Fib, USO did a bearish left-right combo today at the 50% retracement, more downside. I don't know. Now, I probably wouldn't have put the retracement on, but if you did, and notice how looks like it failed right at the 38 percent retracement and started back down again. Yeah, you could probably short this one on weakness. That is the USO funds, but the crude oil, as you can see, Had a big bearish engulfing. Remember our simple rule: the bigger the signal, the more compelling they've changed investor sentiment. Came back up, and this is why if you're buying here, you'll usually hear me say, watch to see what it does when it gets to the 50 and the T-line. When I say that, that means watch to see what type of formations. Had a doji and a shooting star. In both cases, they couldn't get back up above the T-line. Right now, after hours, they're trading down another 20 cents. So what's the implication here? You're not in the oversold area yet. You're getting there. But it's probably a good indication that this might be a little bearish J-hook pattern. Okay. Probably going to recommend VSI for tomorrow, because we're getting, if it opens positive, especially if they gap up, knowing that this is a resistance level, probably wave 1, wave 2, going into wave 3. Probably going to short RGNX on a lower open tomorrow, meaning if the stock opens lower, starts trading lower. That also means if we wake up and the pre-market futures are showing the Dow is going to open up 140 points, you watch it a little bit to see if they're still selling or whether they're going to kind of bobble in here. That's not the right word. It's going to hover in here. Okay, so with that, are there any general questions on candlesticks? If not, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. That one looks like it's getting set up to it's failing. If you're ready to short this one, just be conscious of what it does right here at the 50. But I'd be more apt to be, if I was long, I would have been out of it today. I'd be more apt to be ready to go short on it. Duluth, stay long. I've forgotten about this one. This is your classic pattern. There's your big fry pan bottom. There's your J-hook pattern. Fry pan bottom. And you're right here at the breakout. So what's the classic pattern? What do you expect coming out of a fry pan bottom? A very strong price move. What's your prerequisite for a J-hook pattern? A strong price move. I'd be a buyer of this one on positive trading tomorrow. That's a good looking chart. Boeing. Let's see. You want to see this hold the T-line. I might even be a buyer if it comes back up through today's open. That tells you they did hold it the T-line. If it opens lower, now you got to watch your next target, which is going to be the 50-day moving average. Right now, yeah, it's going to be important that they on how they open it tomorrow. FedEx, El Pashal. Slowly coming back up. Now, again, there was your cradle pattern. And then we closed it right back out, because if this was the candle that told you the bulls were in control, and this candle closed more than halfway down there, that told you the bears are in control. Now, you're starting to get some buying again. If you like it, you can be buying it, because it started with this cradle pattern, and this was kind of your stutter step, meaning they took it up, made it choppy, and now they're back to buying. AK Steel. You can stay long on this. You can see how it broke out through this resistance level. Now you just have to make sure it can get up through the 200-day moving average. And CGC is one where if you were short, Remember, the bigger the signal, big bearish engulfing, close below the T line. They couldn't close it above the T line. But now you're down here in the oversold area. So where's your logical place to tell you that there's too much buying in the oversold area? You put your stop at the previous day's open. Because logic says if the bulls can bring it back up through that level, where's your next likely target? At least probably back up to the T line. Silver. You stay short until you see a buy signal and a close above the T line. ARQL. This one you can get ready to buy, but it definitely needs to open positive tomorrow. I would probably be more comfortable buying it if it came back up through today's high. That would tell you the T line is not acting, or not being a consideration anymore. Here's another one that kind of did the message gap up. I don't know what this is. Heck, I hate when I do that. You can stay long on this one. There's your message, where they gapped it up, but brought it back, and now they're buying. That tells me there's probably more upside. There's a lot of the banking stocks that were acting well. Some nice breakouts. Facebook, all you can do is stay long as this stays above the T line. Notice how this one started with your best friend gap up, and then notice what they really haven't been able to do until here. That's where you took your profits. That's where you were buying back. VCell, another one where you stay long, but it did kind of a bearish Harami shooting star type signal today. If you're staying long, you don't want to see this close back below the T line at all. Light, that one you probably want to get ready to go short if it opens weaker tomorrow. Again, there's your bearish best friend. Now you've got the potential of a bearish doji sandwich. Reda, that was one where you could see the J-hook pattern. Wave 1, wave 2, wave 3, and you got some good news. Right now, the statistics say if it opens lower tomorrow, you take your profits. And then you just get ready to buy it back if it comes back up through the close of that big day. XLF, you can stay long. You can see you've got a resistance level also right here. But you do have a little J-hook pattern using the 50 as support. You can buy this one on positive trading. Oops, XLK. Stay long on this one. They haven't been able to close it below the T line. CYH popped up today, kicker signal. So this one we were discussing in the chat room today by saying, oh, it's up pretty big. Do you buy it? Well, that's where you flip to your 10-minute chart. Say, yep, I can be buying here. I can be buying here. Yeah, I might not buy right here, but I'd be buying here. And then you can see what happened at the end of the day. Even though it closed below the T line with less than an hour to go, what did that tell you about the strength during the day? That it was probably going to close near the high end of the trading range today. Coca-Cola, just not a very active trader or big mover because it's kind of your quintessential institutional trader. But if you like it, you just stay long as it stays above the T line. Now, notice what they did right here. They broke through the 200. It's not unusual. They'll come back and test the 200 to see if it's going to act as support. If it fails the 200, you come out of it. If it stays above the 200, that means your uptrend is still in progress. The Qs, just like the NASDAQ, opened lower, came back up and traded, closed above the T line. AMP, nice little slow curve breakout. Another one you can buy on strength, probably using your 10-minute chart. where, I went way P, B, C, T. There's the belt hold. Remember the significance of a belt hold. Took out a lot of sellers. Notice you had buyer sellers, buyer sellers, buyer sellers, buyer sellers. Took out a lot of sellers. That means there's less sellers in the way. That usually starts your next uptrend, and you're right here at this kind of breakout level. You can buy this one. It's not the best one in the world, but I wouldn't be afraid to be buying on strength on that one. And Freeport, kind of assume that's in a trend channel. You got dojis. You're not quite in the oversold area. So if I was short, I'd get ready to cover a short position, especially if it came back up through the high of today. That would tell me the bulls are taking control or starting to take control. Zoe's pitching another one that sitting right here on the T line. It has to continue positive. If this one opened lower tomorrow, I'd probably close out the position. You can always buy it back if it comes back up through the T line. Jill, nothing of any great consequence here yet, but it didn't close back below the T line. You can see how it did support off the 34. If you're long, you stay long, but you don't want to see it open lower tomorrow. If you're thinking of going long, buy it when it comes up through the this little level right here. That tells you that they did support at the T line, and that they're still taking it higher. Here's another one, AIM. Looks like it failed at the 50. You can get ready to short this one. That's not what I want to do. Because if it breaks, it looks like it already broke that level, or that level. If it opened lower, wave 1, wave 2, failing here at the 50, wave 3, probably coming back down to test the lows. Goldman. Oh, man, what did I do? Goldman. Stay long. Notice how it used the T-line as support, staying above the T-line, coming back up through. AVGO, you can buy this one on positive trading. If you went long down here on the Morningstar signal, you needed to see what it was happening here. Right now, it looks like the bulls are in control. If you buy on positive trading tomorrow, you've got a very simple stop loss. You don't let it close back below the T-line. KKR, nice J-hook pattern. Again, a little belt hold bullish engulfing. Telling you they've taken out more sellers. That's a good-looking chart. Mattel. You can be buying this one, not the greatest setup yet. I'd be more apt to buy it if it came up through that level. Because otherwise you might be stuck in this sideways for a little bit longer. AAOI, if you're short, you stay short. Here's a perfect example where you saw the bearish Haramis getting up toward the overbought area. You set your sell stop just below the low of that Harami. I told you they were going in the wrong direction. You should be out of that long trade. If you're short, now you watch to see what they do here at the 50. Durham, another one trying to support at the 50. If you're thinking about buying this one, you need to see it close above the T-line. Oracle, tough one to trade because of its institutional considerations. You're right here at a resistance level. You're staying above the T-line and the 200, but you've got a series of dojis. That pretty much tells you you don't know which way, or the chart's telling us we don't know which way it's going to go. If it did another doji tomorrow, I'd close it out. You can always buy it back if it comes up through here. You gave up a little bit of profitability, but you dramatically improved your probabilities. Bill, a fry pan bottom is usually a big, slow, rounding bottom like this. A J-hook pattern, You don't know which. J-hook pattern usually is a stronger move here and a quicker pullback and then heading back up. ZTS, stay short. You can see that they're having a hard time getting up above the T-line. If they break this level, that means there's probably more downside. Raytheon, get ready to go short. Here's another perfect example of if you were long, you started seeing dojis, you put your stop just below the low of the doji and or the T-line because logic says if it comes in that direction, they're selling it off. Now you can be ready to short this one, yes. And PayPal, stay long. Here's another example that if you had closed it out, that was the right thing to do if you close it out on weakness. But then when they started bringing it right back up through the open and the T-line, you can buy it back because when you were selling it, which way was it heading? It was heading south after a sell signal. If it came back up through this level, what was it creating? It was creating kind of another buy signal. You buy it back. So you gave up 46 cents, but you weren't buying it to make 46 cents. You were buying it because hopefully this has another 4 or 5 points to the upside. Red Hat, another one that if it stays flat, you close it out. You could always put a buy stop up here knowing that it did move in that direction if you're looking to go long. J-hook is, yes, candlestick terminology. Fry pan bottom is candlestick terminology. Candlestick forum. Let's see. When you trade your strategy, do you look at opposing support and resistance level as impediments to your entry? Yes. If I was buying right here, what's my criteria? Well, I've moved too far away from the T-line and the 200, well, the T-line. So where's my first logical target? Back up here to the T-line and the 200. If it comes up here and then starts selling off, what's that tell me? They aren't coming up through here. I close out the position. If it goes through, now I'm looking for my next target of what everybody else is looking at. Now what I see on this one is until this breaks out to the upside, wave 1, wave 2, wave 3 should be somewhere up here to the 50 and or fill in this gap area. J-hook is like a bull wedge. No, not necessarily. Let me see if I can find a J-hook pattern somewhere. Anybody remember a good J-hook pattern? This can be considered a J-hook pattern, but it's also got this like slow curve fry pan bottom as the pullback. Now this is a classic pattern. Classic pattern is a fry pan bottom followed by a J-hook. Macy's was, yeah, but again, if this had, this one's got a little J-hook pattern right here. Wave 1, wave 2, J-hook pattern, wave 3. Now you've got wave 1, wave 2, breaking this downtrend. Now you're in wave 3. Okay, everybody, that's about all we got for tonight. We'll see you bright and early in the chat rooms tomorrow. We'll see you then.